Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon and filings, especially when it comes to money matters. Today we're diving into a semi-annual report from the CornerCap Fundametrics Large Cap ETF. And let's just say there are some interesting shifts happening. So, what is the big picture here? This report covers the period from the 1st of April 2025 to the 30th of September 2025. And it is essentially a financial health check for this exchange-traded fund. A lot of these filings can be dry, but we're going to cut through the noise and tell you what actually matters for investors. If you are looking for deep dives into financial documents like this, make sure you are subscribed and join our awesome Discord community. The link is in the description below. First off, let's talk about what this fund does. It is a large cap exchange traded fund, meaning it invests in big, established companies. The goal is long-term growth. This report is particularly interesting because it highlights some significant upcoming changes. The big news is that the fund is planning to reorganize. That means it will merge or convert into a different fund, specifically the iShares Large Cap Value Active ETF, which is managed by BlackRock. This is a pretty common move in the ETF world, often done to streamline operations, reduce costs, or adapt to market changes. The shareholders will get a chance to vote on this, and it's expected to wrap up in early 2026. Essentially, existing investors will see their shares in this fund transform into shares of the new BlackRock fund. Now, let's get into the nitty-gritty of what it costs to actually invest in this fund. For a hypothetical $10,000 investment over the last 6 months, the costs were a mere $8. That translates to 0.15% of the investment. This is quite low, which is generally a good sign for an ETF, as lower costs mean more of your money stays invested and working for you. As of the 30th of September 2025, the fund had net assets worth over $204 million. That is a substantial amount of money being managed. It held 151 different investments, which suggests decent diversification. A core principle for preventing too much risk, the net advisory fee, which is the fee paid to the investment manager, was about $145,000. And the portfolio turnover rate, which measures how often the fund buys and sells its holdings, was a modest 11%. A lower turnover rate often indicates a more buy and hold strategy, which can sometimes lead to lower trading costs and potentially better long-term performance, as opposed to frequently trading in and out of positions. Let's see where the money was actually going. The top holdings, the biggest positions in the fund's portfolio, give us a clue about its investment strategy. We see names like Johnson & Johnson, Wells Fargo, Cisco Systems, Citigroup, and JPM Chase. These are all very well-known large companies. The report details the percentage of net assets invested in each. For example, Johnson & Johnson made up 2.2% of the fund's assets, and Wells Fargo was at 1.8%. This is pretty standard for a large cap fund focusing on established businesses. The report also breaks down the investments by sector. We see percentages for areas like aerospace, defense, agriculture, computers, and utilities. This gives us a broader picture of the fund's diversification across different parts of the economy. For instance, looking at the breakdown, we see 9.1% in banks, 8.3% in pharmaceuticals, 8.4% in software, and 6.3% in oil and gas. These are the largest sector allocations as of the 30th of September 2025. This is where we get into the really detailed financial meat of the report. The schedule of investments lists out every single holding in the fund. It tells us the number of shares, the value of those shares, and often the percentage of the fund's total assets they represent. For example, we see Lockheed Martin Corp. with 2941 shares valued at over $1.4 million. Then there is Wells Fargo and Company with 42,916 shares valued at over $3.5 million. And Johnson & Johnson, a significant holding with 23,983 shares valued at over $4.4 million. These are substantial stakes in these companies. The vast majority of the fund's assets, 98.3% as of the 30th of September 2025, are invested in common stocks. This indicates a strong focus on equities. Breaking this down further, we see specific sectors within common stocks. The fund has a significant exposure to the banking sector, making up 9.1% of its assets. Here we find holdings like Bank of America Corp., Citigroup Inc., and JP Morgan Chase & Company. These represent major financial institutions in the US economy. Another significant allocation is in the pharmaceuticals sector, at 8.3%. Key holdings here include AbbVie Inc., Bristol Myers Squibb Company, CVS Health Corp., and Johnson & Johnson. This sector is often seen as defensive, meaning it tends to perform relatively well even in economic downturns. as demand for healthcare products and services tends to be consistent. Tied for the largest sector allocation with pharmaceuticals is the software sector, also at 8.4%. This includes companies like Adobe Inc., Microsoft Corp., and Salesforce Inc. This heavy investment in software companies shows a focus on technology and its ongoing growth. The fund also has a notable presence in the oil and gas industry with 6.3% of its assets. Holdings include Chevron Corp., ConocoPhillips, and EOG Resources Inc. This allocation reflects an investment in the energy sector, which can be cyclical but often plays a crucial role in the global economy. Moving on to the statement of assets and liabilities, this is like a snapshot of the fund's financial position at a specific point in time. As of the 30th of September 2025, the total assets were over $208 million. Importantly, the investments themselves were valued at over $207 million, which is the bulk of its assets. On the liability side, there were payments due, such as for securities loaned, and fees owed to the advisor, totaling around $3.7 million. The net assets, which is what the fund is truly worth after liabilities, stood at over $204 million. This statement also shows the net asset value per S-share. For this period, it was $46.19. This is a crucial number for investors as it represents the value of each share of the fund. Looking back at the history, the net asset value per S-share was $41.6 at the end of March 2025, so there's been a positive increase in the value per share. Next up is the statement of operations, which details the fund's income and expenses over a period, essentially its profitability. For the period ending the 30th of September 2025, the fund generated over $2.2 million in investment income, primarily from dividends after accounting for expenses, including a net advisory fee of about $145,000 thanks to a waiver from the advisor. The fund had a net investment income of over $2.1 million. More significantly, the fund saw substantial gains. It realized a gain from investments and in-kind redemptions of over $6.7 million. On top of that, the unrealized appreciation, meaning the increase in value of investments the fund still holds, added another $11.6 million. So, the total net realized and unrealized gain was a very impressive $18.3 million. This resulted in a net increase in net assets from operations of over $20 million for the period. This is a strong performance, indicating the fund's underlying investments have grown in value. This section shows how the fund's net assets have changed over time. Between the beginning of the period and the end of September 2025, the net assets increased by about $12.8 million. This increase was driven by the strong investment performance we just discussed. It contrasts with a decrease in net assets for the year ending the 31st of March 2025, where operations were strong but capital transactions led to an overall decrease. This shows a turnaround in performance and net asset growth in the current reporting period. The financial highlights section distills all of this down into per-share data, making it easier to compare performance over different periods. The net asset value per S-share at the end of this period, the 30th of September 2025, was $46.19, up from $41.6 at the end of March 2025. The total return for the period was 11.06%. This is a solid return, especially considering broader market conditions. It is also worth noting that the ratio of expenses to average net assets after an expense waiver is very low at 0.15%. This highlights the benefit of that waiver from the advisor, keeping costs down for investors. Now, the notes to the financial statements are where you find the important details and explanations. These are crucial for understanding the numbers. This note explains the fund's structure. It is a part of advisor-managed portfolios, and CornerCap Investment Counsel, Inc. is the advisor. Importantly, it confirms that this fund is the successor to a previous fund, the CornerCap Fundametrics Large Cap ETF, which reorganized into this one. The performance history of the predecessor fund is adopted by this new fund. It also elaborates on the upcoming reorganization into the iShares Large Cap Value Active ETF ITED, noting that the investment strategies will remain the same. This is key for investors who might be concerned about a change in investment approach. Here, we learn how the fund values its investments. They use the last reported sales price on an exchange for publicly traded securities. For investments that aren't actively traded or where prices aren't readily available, they use fair value. They categorize these valuations into level 1, level 2, and level 3. Most of the fund's investments, specifically common stocks, fall into level 1, meaning they are valued using unadjusted quoted prices in active markets. This is generally the most reliable way to value an investment. This table confirms that almost all of the fund's investments valued at over $200 million are classified as level 1. This tells us the fund primarily holds assets that are actively traded and have readily available market prices, which is good for transparency and accurate valuation. This section details the agreement with the investment advisor. The advisory fee is 0.50% annually, but importantly, there is a fee waiver in place until at least September 2025, reducing the fee to 0.15%. This waiver is a significant cost saver for investors. The advisor also covers most other fund expenses. This suggests a strong commitment from the advisor to keep costs low. This shows the actual buying and selling of securities. For the period ending the 30th of September 2025, the fund purchased over $26 million in securities and sold over $21 million. There were also significant in-kind transactions related to creations and redemptions, where securities were exchanged rather than cash. This is a normal part of ETF operation. This note provides a look at the fund's tax situation. It shows the tax cost of investments, unrealized appreciation and depreciation, and accumulated gains and losses. The difference between book and tax reporting is notable, especially for things like wash sales. This section is important for understanding potential tax implications for shareholders. The fund has carried forward capital losses, which can be used to offset future taxable gains, meaning some of the gains you might see in the financial statements could be tax deferred for shareholders. Interestingly, this fund participates in securities lending. They lend out their securities to other financial institutions and earn income from it. The loans are collateralized, meaning the fund receives assets as security. The collateral received is invested in short-term obligations. As of the 30th of September 2025, the fund had over $3.6 million worth of securities on loan and received over $3.7 million in collateral. This is a way for the fund to generate a bit of extra income. The fact that they are actively lending securities suggests they are trying to maximize returns from their holdings. The income generated from this is reflected in the statement of operations. So, looking at this report for the CornerCap Fundametrics Large Cap ETF, what is the story? The fund demonstrated strong performance in the reporting period, with its net asset value per S-share and total return showing positive movement. The upcoming reorganization into the iShares Large Cap Value Active ETF I is the most significant future event, likely aimed at creating a more streamlined and potentially cost-effective investment vehicle under BlackRock's umbrella. Boosted by an advisor fee waiver is a definite plus for investors. The underlying holdings are in established large cap companies spanning key sectors like technology, healthcare, financials, and energy, which is fairly typical for this type of fund. The participation in securities lending is a minor income, generating activity that adds a small boost. However, a key consideration is always the management and strategy of the successor fund, while the investment strategy is stated to remain the same. Investors should always do their due diligence on the new management team and the specific objectives of the iShares Large Cap Value Active ETF DI before the reorganization is finalized. The portfolio turnover rate of 11% indicates a relatively stable approach which can be beneficial for long-term investors. In conclusion, this fund appears to be in solid shape financially for the period, with good performance and low costs for investors. The reorganization is the main item to watch for existing shareholders, and it is crucial to understand the details of the new fund. Alright, that is our breakdown of the CornerCap Fundametrics Large Cap ETF Semi-Annual Report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.